Assalamualaikum warahmatullah and good day to everyone. In this video presentation, I will be talking about earnings per share or EPS under MFRS 133. To make the presentation more effective, make sure that you have the handout that comes with the video ready with you. For this presentation, I would like to give credit to KPMG for their EPS IAS 33 Handbook 2014. Specifically, we will be talking about why EPS is required to be disclosed by companies, the objective of MFRS 133 in serving the purpose of that disclosure, entities that are required to disclose their EPS, and what exactly that they need to disclose or present. And then we will be looking at the two types of EPS, which are basic EPS and diluted EPS. Let us start with what it means. Basically, we know what EPS is, current year's earnings divided by outstanding ordinary shares. So what we are getting is how much earnings generated by a company that year for every ordinary share. So it also represents profitability of the company. The higher the EPS, the more profitable the company is. So if you own shares in a company, this ratio will tell you how much each of your share has generated earnings for the company. It is presented in ringgit or in sen if the value is very small. Any positive value is applauded. Nevertheless, it does not represent what you will get in terms of dividend for the capital that you contributed to help generate that much of earnings each share, simply because shareholders have no direct access to those profits, and as we know, all or portions of the earnings will be retained as reserve. Also, EPS just shows profit for every share outstanding. It does not compare the earning with the amount of capital you have contributed. This, though, will be presented by return on capital ROC or return on equity ROE. So why is it important then? Well, some may find it important. In fact, some may find it as one of the most important variables in determining a share's price. It is also a component used to calculate price to earnings ratio or PE ratio, which is one of the most used metrics to value shares, thus firm, especially in terms of its future earnings or future growth. PE ratio is simply share market price divided by EPS, and this helps us to determine the market value of a share as compared to the company's earnings. It also shows what market is willing to pay today for a share based on its future earnings. Say for example that we have a firm with share price of 25 ringgit and EPS of 2 ringgit. The PE ratio will then be 12.5. This indicates how much investor is willing to pay for every ringgit of earnings in that firm. In other words, investors are willing to pay 12 ringgit and 50 cent for every 1 ringgit of the firm's earning. This is why PE ratio also known as a price multiplier when calculating firm's value. Consequently, a high PE ratio could mean that a share's price is high relative to earnings and possibly overvalued. Conversely, a low PE ratio might indicate that the current share price is low relative to its earnings. But of course, PE ratio is also a bit useless to be assessed in isolation. It should be used in comparison with the industry's PE ratio, a benchmark index, or the historical PE range of a share. This way, it helps you to select promising shares. So the standard is only guiding us on how to determine the EPS and how to present EPS in the financial statement. The earnings part is quite straightforward, as you will see later, but the challenge would be on determining the denominator of the EPS, which is the number of outstanding shares relevant for the calculations of EPS. This guideline applies to individual entity and a group. For individual entity, it must be presented in its individual financial statement, and for group, it must be presented in its consolidated financial statement. Either individual entity or group, their shares must be traded in public market, or they are on their way to do that, that is, filing for issuing shares in a public market. In terms of what to present, that is, whose EPS should it present, especially in a group setting, is it parent's individual EPS or group EPS? If an entity presents both separate and consolidated financial statements, it needs to present EPS only for the basis of consolidated information, thus only the group EPS and not its individual entities' EPS. If it chooses to present its own EPS, an entity shall present it in its own comprehensive income and never in the consolidated comprehensive income. Let us now discuss how we calculate EPS with the guidelines given by the standard. Let's start with the basic EPS. If it is an individual entity, it is pretty straightforward. It uses its own earnings, however much it is, for the financial year. For group, however, the earnings relevant to EPS must be the amount attributable to the parent. That is, if the group has non-controlling interests that also have rights to the earnings of subsidiaries. So now you can see the importance of determining profit after tax attributable to owner and NCI, right? For the denominator, the number of units of outstanding shares should be the weighted average figure of the parent during the period in which the EPS is calculated. So we have the basic formula as profit or loss as the numerator and weighted average number of owner shares outstanding as the denominator. Specific to the earnings, it should be relevant to the ordinary shareholders. Therefore, the profit or loss must be from continuing operation and those attributable to parent, and it must be net of after-tax dividend for preference share and any differences in the settlements of preference shares. In determining the after-tax preference dividend for non-cumulative preference share, where dividends is not accumulated to the subsequent period, we simply take the one declared in the respective period. For cumulative preference shares, we know that the dividend can be accumulated to the subsequent financial year. Therefore, the dividend should be the amount required for the period, either declared or not, minus those paid or declared in the current year, but is meant for previous period. In short, we only concern those relevant to the current period. As for the settlements of preference shares, this referred to preference shares that could be redeemed. So the difference between the fair value of the consideration paid for the redemption and the carrying amounts of the preference share will also be deducted from the profit relevant for the calculations of EPS. As for the number of shares, this poses quite a challenge as we need to consider changes in the number of shares within the period to get to the weighted average number of shares. Thus, dates are very crucial in this matter. Depending on the source of changes, we simply need to be aware of the date for the changes. For example, if you are talking about new issue of shares, then we need to be aware of the date the cash for the new issue received. For voluntary reinvestment in terms of dividend reinvested as shares, we need to be aware of the date of the reinvestment. For conversions of debt, where at times we offer convertible bonds that giving the holder an option to convert it to ordinary shares before its maturity, we need to be aware of the date of the conversion. And for shares as settlements of liabilities, we need to be aware of the date of the settlement or when we stop paying interest for the debt, which is in a way indicate that we no longer have the obligation, thus liability. As we are looking at changes in number of shares, that should include those increase in outstanding shares without increase in resources as posited in paragraph 26. And the way we treat them is as if those shares have been outstanding from the earliest period presented. The source of such changes in shares include bonus issues, when company issue new shares free of charge to existing shareholders, share split, where we split one existing share to 2 or 4 depending on what the entity wants to achieve from the split, and the bonus elements in rights issue. Now for the rights issue, we know that this refers to those shares offered to existing shareholders at a much lower price than the market price. Therefore, in a way, there is an element of bonus there in relation to the market price. So we need to calculate out of the total shares issued under this program, how many of it are not paid by shareholders, thus free or given as bonus? Let us do some exercises to understand it better. Please make sure that you have the handout with you. If you haven't, please pause this video and download the exercise and come back to this video when you're ready. Exercise 1 is pretty straightforward. We have new issue of shares as well as repurchase of shares, so we have both an increase and a decrease in number of shares throughout the year. What we want to be aware of are the dates and how long in terms of months has a group of shares stays in the company that year. We can either look at the separate group of shares, or we can also look at the total number of shares at different dates within the year. To calculate the basic EPS, we start off with calculating the denominator, as it is the one who needs some adjustments. We have 1.8 million units of shares at the beginning of the year, and this amount remained in the company for 3 months from January to March. At the end of March, the company issued new shares amounted to 1 million units of shares, resulting in a total of 2.8 million units of shares, and this amount remained in the company for 7 months from April to October. And finally, the company bought back 360,000 units of shares, resulting in a balance of 2.44 million, and that total remained in the company for 2 months. We end up with a total number of shares of 2.49 million units. Or we can look at the changes instead. We start off with 1.8 million on 1st January, thus this amount remained in the company for the entire year. Then we add the new issuance of shares of 1 million units, and this group remained in the company for 9 months from April to December. And we minus the 360,000 shares bought back, and this deduction remained in the company for 2 months from November to December. We will still get the same end amount, which is 2.49 million units. Having solved the denominator, we can now calculate the basic EPS by dividing the profit after tax for the year of 3.8 million ringgit with the weighted average number of shares we calculated earlier of 2.49 million units, and we get around 1 ringgit and 53 cent or 153.61 cent. The second one is what we normally see presented by companies, simply because it is very rare that we get anything around 1 ringgit or more. Quite easy, eh? Let's look at the second exercise. In this exercise, we are dealing with bonus issues. Now for bonus issue, we simply treat it as if it has been in the company from the earliest period presented. Meaning, if you are talking about public listed company, by the standard, companies are required to present not only the current financial year's result, but also the previous year's result for comparison purposes. So in this case, we are preparing for financial year 2021. But we know that we also need to present results from financial year 2020. Therefore, the bonus issues, though it was issued only in April 2021, since we need to also present the financial year 2020, we simply take the bonus issue as being in the company since January 2020. Therefore, the EPS for 2020 presented in the 2021 financial statement must also be adjusted to account for the new total number of units of shares. Note that the bonus issues is given at 3 ordinary shares for every shares outstanding before 1st August 2021. So the additional shares from the bonus issue will be 500,000 times 3, which results in 1.5 million new shares. So for the year 2020, we have 1.8 million relevant profit after tax, and divided that by 2 million total units of shares, we get 90 cents per share. For the year 2021, we have 6 million relevant profit after tax, and divided that by 2 million total units of shares, we get 3 ringgit per share. In this third exercise, we are dealing with rights issue. For rights issue, like I mentioned earlier, there is payment made for it, but at lower price. And because of that, we will deal with bonus element in it. So you can imagine that the challenge will be in determining the bonus elements, since just like bonus share, it must be treated as if it has been in the company since the earliest period presented. For this question, shareholders were offered 1 new share for every 10 shares that they already have, which is 600,000 units. So that will be a 10% increase in the number of shares. So the total number of shares after the exercise will be 660,000 units. The price offered was at 6 ringgit each, and the market price at that time was 10 ringgit. So the offer price is 4 ringgit lower than the market price. So we can imagine that the number of shares will need some adjustment, and for rights issue, since it is not that direct, we will need to determine the adjusting factor. But before we can determine the adjusting factor, we need to first determine the theoretical ex-right value of the share. For this exercise, shareholders are given until 30th April to exercise. So after 30th April, the total number of shares outstanding will change to a new total till end of the financial year. Let's assume that everyone exercised their rights by that date. To determine the theoretical X rights per share, or in other words, the theoretical value of the share before the exercise, we need to identify the fair value of the share before the exercise of the rights issued and add to that the amounts received in ringgit from the exercise. Then we divide that with the number of shares outstanding before the exercise plus the shares issued in the exercise, or in short, the total number of shares after the exercise. So we will get to 9 ringgit and 64 cents. So to calculate the adjusting factor, we need to divide the actual fair value before the exercise with the theoretical value before the exercise due to the bonus elements in the rights issue. So in this question, we get a factor of 1.04. In other words, we are saying, in theory, the value of shares before the exercise was 9 ringgit and 64 cents. So every 10 ringgit per share, which is the market price before the exercise, if you divide that with the theoretical value, we should have not 1, but 1.04 share for every share instead. That 0.04 represents the bonus elements or the free shares. So if we can start with the basic EPS in 2020, before the rights issue, we will get the original value of 4 ringgit 17 cents per share. With the rights issue, and since we need to also present previous year's EPS as comparison, we need to restate that value, recalculate the value with the rights issue. So for the denominator, we simply times with the adjusting factor calculated earlier, giving us 624,000 units of shares and 4 ringgit value of EPS. For the year 2021, we have 600,000 units of shares at the beginning of the year, and that lasts for 4 months. And after the exercise, the total amount increased to 660,000 units of shares for 8 months in the year. For the original amount of 600,000, we need to times that with the adjusting factor to recognize the bonus elements of the rights issue, which need to be treated as if it has been there since the earliest period presented, thus also adjusting the shares in 2020 in previous slide. So from this, we get 4 ringgit and 55 cent EPS. Note that after the exercise, when actual shares already issued, the total amount gone up to 660,000. We do not need to times with the adjusting factor, since what we need to adjust is the amounts before the exercise to recognize the bonus elements in the rights issue. I have now illustrated to you how to calculate the basic EPS, taking into account scenarios that include bonus shares or elements of bonus shares to apply the guideline given by the standard in paragraph 26. Please replay these sections if you think that you missed something.